All right. Good morning, traders. Happy Saturday, December 27th. I'm going to get started here with my weekly live session. If you would go ahead and hit the like button, I would appreciate it. It takes a couple of seconds, but it gets a video out to traders in the YouTube universe that are looking for actionable trade setups. All right, I'm going to get started with the SPX chart. Good morning, Michael. Good to see you. I'm going to get started with the SPX chart here, looking from a weekly time frame all the way down to a 4 hour. I give you the levels that I am watching, talk about the price action that we saw, areas of support and resistance, and just give you an idea of what I'm looking for next week. Now, remember, next week is a holiday week, like the week we just finished. And let me tell you, yesterday's price action was some of the most range bound price action I think I have ever seen. It was unbelievable tight price action. I actually did not have a day trade yesterday, and that just rarely, if ever, happens. So it was not a great trading day for me just because the price action was so tight. Now, next week could be completely different. Of course, December 31st falls inside of next week, the last trading day of the year. You can see some tax loss harvesting during that time, people taking losses to reduce their taxes and things like that. So it can be a little funky for us as technical traders, but the important thing is to know the levels on your chart that you're wanting to execute trades and then just executing according to those levels and letting price action dictate our trades. So on the SPX weekly chart, we actually had two weeks where we traded inside of the previous body. And then last week we actually broke out and above. So we did create a buy zone here. We had this gray zone on the chart from previous weeks. It was green. I went ahead and turned it gray because we came down and we tested to the bottom of that zone. But this week's candle being an up candle after two inside weeks gives us a buy zone on the weekly chart for SPX at 68.65 by 67.20. The 9 EMA on the weekly chart is inside of this zone at about 6,800. If price were to dip back into this zone, I would expect buyers to show up in here. And as far as targets above the all-time high, we did create all-time highs last week or this week that had just passed. Above here, these are Fibonacci extension targets. So I'm still waiting for that big round number of 7,000 on SPX. Then basically 70.50, 71.35, and 72.52. This is a 100% of this move right here. Give me 1 second. Ooh, sorry guys. The weather is crazy here in Central Florida. We're really hot one day, and I think we're getting ready to have a cool off. So my allergies go crazy. So extension targets above, no supply because we're at all-time highs. So no actual sell zones unless we create a sell zone during next week. As far as the daily chart goes, you can see here We created an inside and up at that about 6,800 level on the daily chart, but we had 1, 2, 3, 4, 5, 6 days up. Yesterday, we did close inside the body of Thursday's candle. This created an inside candle. So Monday, I will be watching this to see if we create an inside and up or an inside and down. And that's what I was talking about as far as the um, cell zone being created. If on Monday we have a down day, this will create an inside and down and would create a sell zone up in here. But the important levels for next week on SPX using the trendy edges, and these yellow edges are weekly edges, is this range right here from the lower weekly edge to the upper weekly edge. With trendy edges, the bottom edge represents a playing field of demand or support, and I'm looking for buyers there. And then the weekly edge represents a playing field of supply or resistance, looking for sellers at the upper edges. Right now, we're planted right below that upper weekly edge. So I will be watching on Monday, and at the bell on Monday, I will see if we created an inside and down, an inside and up, or just another inside candle. The body of that initial candle is 6904.91, and then the top is basically where we closed yesterday. So if we close Monday below 6905, then I will know that that is an inside and down. Looking at the 4-hour chart, we created a demand zone right here at this lower weekly edge. You can see that inside and up. That is an area that I'm looking for buyers. So next week for any type of swing trade, I would actually love to see a quick, swift pullback to this buy zone. That would give me the opportunity to put a swing trade on for SPX expiring on January 2nd or January 9th, and to play it back up into the upper weekly edge and then these extension targets that are above. We will see. Sometimes the market doesn't give us what we want and we just continue to the upside. But I wanted you aware that 68.72 by 68.53 is my buy zone on this upcoming week's price action. All right. All right, let's get into what is outperforming in the market right now. I like to use koifin.com to get an idea of the different US sectors that are outperforming the overall market. And I look back over year to date, quarter to date, month to date, and just 1 week or 5 trading days. Across the board, gold, gold miners, and metals and mining are strong. They are top performers in all of those time frame look backs. So on my watch list, you are going to see names within those sectors, the gold mining sector, the metals and mining sector, as well as GDX, which is the metals and mining sector, and gold itself. All right. Other than that, other top performing names that are on most of those time frame looks back is semiconductors. They are number 3 in strength, so to speak, from a year to date look back. They are number 5 on a quarterly look back. They don't make the list for a monthly look back. December, they didn't perform as well. But last week, they came back up on the top performers at the number 3 position. So there is some money moving back into the semiconductor sector. So I do have a couple of, I think 3 semiconductor names on my list for this week. What else is on here as far as outperformers would be JETS, JETS, on the quarterly and monthly look back. Then you have financials on the monthly and weekly look back. And tech does make the list on yearly and weekly. Good morning, Joseph and Randall. Good to see both of you. So that is what has made up my list. This list is made up from that list that I just gave you of relative outperformers. Let's start with Alcoa. And I'm going to give you the levels on the daily chart. Now, Alcoa is right at resistance. It's right in a sell zone, not a place that I'm going to start a position. It's just too I don't know. I'm not really a momentum trader. I'm a buy the dip trader. I like to wait for a pullback before buying calls. And on Alcoa, it would need quite a sizable pullback. This alert has been sitting here for since, well, I put it on last Saturday when we were together, and I never got the pullback to go long Alcoa. I'm leaving it here. Now, I know that that would be an $8 pullback, and if you look at the weekly ATR, it's only $3.50. So I'm not really expecting a trade on Alcoa, but I wanted to leave it on the list because it is relatively strong here. Up next is American Airlines. This is part of the jets sector, which has shown relative outperformance looking back over the quarter and the month. So it stays on my watch list. We've been pretty choppy in here since the middle of December, but I do have a buy zone down here at 1514 by 1470. That's going to give me a risk of about 44 cents, and my reward is going to be up here over $1. This is the upper weekly edge there. Now, if I get in this trade, I would be buying a dip down in this zone, my stop is 1470. That would be a candle close below there. So it has lower risk than what the reward is. And it's actually a 2-for-1 at the first target there. Above there, I'm looking for 1720 by 1909. So those are the targets to the upside. And this is the buy zone. All right. So that's what I'm looking at for American Airlines. Up next is Amazon. Amazon's interesting in that we got a pullback to the buy zone here. Now, this zone was created the week of Thanksgiving. We got a pullback on December the 17th, and since then, Amazon is slowly but surely making its way back up into resistance. Now, if I'm taking a trade on Amazon and waiting for a pullback to this buy zone, I have to realize that the buy zone has been tested. It was tested back here in the middle of December, and it got the move out of the buy zone. But we got a lot setting up right here at this lower weekly edge. You have the EMA cloud, you have the 50 and the 21 moving average that a lot of traders like to trade off of. I'm looking for those to be support, but occasionally you will get that pullback. And so that means if I get a chance next week to buy a dip on Amazon near 227, I would simply go to the smaller time frame chart and use the 4 hour inside and up to trade this name back up initially to the upper weekly edge and then those targets above. So that would give me a buy zone of 227.51 by 224.35. That is about a $3 risk there, and the reward is going to be 4.5 to $5. So that does meet my risk to reward criteria for a trade on Amazon. So I'm actually going to put my alert at that lower weekly edge and then watch for higher lows inside of that buy zone. But I like the move out of the zone here because we got a nice big imbalance candle on this 4 hour candle here. All right. So that is where my alert is for Amazon. You're not going to see a buy zone on the daily chart there because I would be using this imbalance here on a 4 hour chart to take that trade on Amazon. All right, up next is good old Barrick Mining. This is a gold miner. This thing's been on fire. I did not get a buy on it last week. I left it on my chart or on my watch list rather. It's right at an area of resistance. I'm looking for a pullback still to this buy zone here. I'm gonna move my alert up a couple of pennies because it was below. But this is where I'm looking to buy a dip on Barrick. Now, gold or gold miners would need to show some weakness to get a pullback, and I have to remain patient. If I don't get the pullback and I don't get a trade on Barrick, that's okay. I will remain patient here and not just put a trade on because of impatience. If I get that pullback, then I'm looking to trade it from this zone of 43.28 to 42.04 and targeting 46.29, 47.24, and 49.90. All right, so that's my plan on Barrick. Then a financial name would be Bank of America. We traded this in the trendy room here at Simpler Trading for a win, and now I'm looking for another entry. I'm looking at a 4 hour inside and up candlestick structure right there. If I change this to 4 hour candles, uh, I will show you that. Sorry, those funky wicks down here have messed up the financials charts. But we do have a 4 hour inside and up right back here. This is the zone I would be looking to trade off of the daily chart. Then my targets are going to be 56.41, 57.02, 58.13, and 59.91. As far as risk to reward goes, this is about a 50-cent risk, and the reward is $1. So a good risk to reward, and then obviously the upper targets are way better than a 2-for-1 risk to reward on BAC. So I like it because there is a small risk. That 4 hour zone is small, and my reward is a 2-for-1. Another financial name that I am watching again from a 4 hour zone is going to be Citigroup. My buy zone is 115.77 by 114.51, about $1.20 risk there. This is a 4-hour inside and up. And then my reward is going to be 122 by 130.70 on Citigroup. Up next is Cleveland Cliffs. This is back into the metals and mining area of the market. I love the buy zone down here at 1296, and I forgot to create my alert. So let me go ahead and create that real quick. 1296 to 1214, you have some key moving averages inside of that zone, as well as some trendy edges inside of that zone. And then, of course, the inside and up candlestick structure. So you got a risk of about 80 cents. The reward is better than 80 cents. And then, obviously, these upper targets are way better than a 1-for-1. So this is a trade. I would look to trade this. This is very important. If my ultimate target is up here about $4 above where I would be entering, then I need to make sure that I give myself plenty of time on the trade. And you can see 1 month wouldn't do it. So I would be looking to buy out to the March expiration on this trade rather than just, or I could do February, but if I want a little extra time, I would use March expiration there. Okay. Salesforce, I went ahead and added Salesforce to the watch list. From a yearly time frame perspective, this thing has been just steadily heading down. But it has caught a bid as of late, and the 21 has crossed back over the 50, and it's gotten above the 200 SMA with a possible cross again and get those moving averages stacked. The buy zone is about $8.50 wide, and that initial target is not a 1-for-1, but the ultimate target is better than a 1-for-1. So this trade, I'm probably, or this name may not make my trades for the week on a pullback, but I want it on the watch list so I can keep an eye on it because it does have plenty of room to move back up near the all-time highs where much of tech is setting at all-time highs. Cisco is a trade that I am currently in. It expires January 16th. I've already taken some trims on this trade. It continues to hold the bull channel, so I'm leaving it on my list. My next target is up here near $81. If it makes that this week, then I will go ahead and exit the runner on this position, but it remains on my watch list. If you're not in Cisco, you like this name to the upside. It created an inside and up when I was able to get my trims here back at 77 by $76 basically. And then I would target the same targets that I've already trimmed the position at. So Cisco is still looking good on this daily chart. Now let's talk about the gold miners. I can either trade some of these gold miner names individually, or I can just trade the ETF itself. I would be looking for a pullback near $86 on GDX to go long. I would love a pullback to this zone. I would be going long right at right around the $86 mark. My stop would be the $83 mark. My targets would be 91.28. These are extension targets above here, but 94.21, 97.69 are the extension targets above. Now, if you notice this bottoming wick here lining up with the 9 EMA, if gold miners continues the incredible strength that it has shown this year, then I might not get the dip back down here, and I could take a trade off of the lower weekly edge and the daily cloud here at about $88. Up to you. I'm going to remain patient because gold and gold miners is pretty extended on the higher time frames. I'm going to remain patient for this zone down here, but I need to point out that at about 88 and a half, you do have another potential buy zone. And if we looked at 4-hour candles, you will probably see, yeah, 4-hour inside and up candlestick structure here that's going to line up with those levels. So that is an idea if you want to get in a trade on GDX before my particular buy zone. This area around 89 to 88 and a half is a buy zone on a 4-hour chart. Now let's look at gold, GLD. This thing is just, it based here for 1, 2, 3, 4, 5, 6 days. For 6 days, gold just based right at this 400 to 390 mark, and then it gapped up and up and up. Now, a pullback to 405, 406 is going to be the lower weekly edge for this week. A deeper pullback, which is what I'm going to focus on, is going to be down here near 400. So I'm going to create my alert down here and be patient with gold because the gold futures itself is definitely extended. But for a trade off of the lower weekly edge, the daily EMA and such, very similar to the gold miners GDX chart, your buy the dip is going to be at 407.30 by 405.72. That's a small risk. So from the lower weekly edge down to this bottoming wick here of that gap, you could take a trade from there. I would definitely, if you see a pullback like this, I would definitely not step in front of a falling knife. I would wait for some confirmation down near 407.30, wait for higher lows before going long. Then I'm targeting 412 and a quarter and the all-time high 418.45. As far as some extension targets goes, I would just use where we quit the consolidation and run some extension targets. I like to go between the 236 and the 382, then use the 618 of that move and the 100. So those are some extension targets above for GLD. And again, the first zone to trade off of is going to be 407.29 to 405.72, trimming, trimming, and then extension targets. The next zone would be down here, that gap fill by 391.47. All right. All right. Let's look at Google. Google has a buy zone that I am interested. It's actually a zone that I bought the dip at already. This is not a fresh zone. It's actually this pullback that came back to this zone here, but we created a new inside and up there at let's just say 302 to 296. This would be a buy the dip opportunity. I would be targeting 314, 320, and then all time high 328.73. I like Google here for just a multitude of reasons, but I would like to see a pullback. The more aggressive trade on a pullback to 307.16, you have a lower weekly edge there. That zone itself, 307.16 to 305.30, has been tested, but it does give you another zone to potentially trade off of based on the lower weekly edge. So it is a risk of about $2, and the reward is quite nice at $7. So I'm going to move that alert up just because you could see some nice price action in Google next week going into the end of the year. But this is the earliest I would be interested in starting a position on Google would be right about 307 by 305. And then, of course, this zone back here that I've already traded out of once. All right, targets are above. Here's a gold miner that has my attention. It has had my attention. It's really not doing a lot. I mean, it's been consolidating here for quite some time. It looks maybe like it is doing something, but it's really not. It created an all-time high. I've got extension targets above. If this thing comes back down to this area that it was holding, that's going to give me a risk of about $1.80 here. My reward is a 1-for-1, and then the extension targets above are obviously better than a 1-for-1, such as a 2-for-1 or 3-for-1. So this is my new buy zone on Hecla. If I'm in a trade already on GDX, I would not start trades on these individual gold miner names, but I'm going to just play it by which one gets to my buy zone first. All right. And if you haven't already, please do me a favor and hit the like button. Also, if you're not subscribed to the channel, I put content out on YouTube, technical content, chart ideas, and also videos to help with your trading mindset. So much of being a successful trader starts between your ears. It starts with your emotions, and I have a passion to create disciplined and consistent traders, and that all starts with trading mindset. So I have some videos on that as well, and I try to push out quite a bit of content each week. So please make sure you're subscribed to the channel. All right, IWM, this is a name or a an ETF that I am interested in watching through the first couple of weeks of January. I do have a buy zone down here at 249.28 to 246.70. Looking to buy a dip in this area. Now, if small caps start getting a bid into the first part of January and you see um, a bid here from this zone. I'm looking for the upper weekly edge as first target. So my risk is going to be about $2.50 there. My reward is $5. That's a 2 for 1. Then I'm looking at all-time highs and extension targets above there. Um, IWM or the Russell made new all-time highs, whereas tech has not made a new all-time high yet. So I've got some tech names on here in the event that the NASDAQ wants to finish the year strong and get back up to all-time highs. I wanted some tech names on here, but I'm also keeping an eye on the small caps with them at some pretty major support right in here. They are pretty choppy in this area, but a breakout could land us at extension targets and new all-time highs. So the buy zone again, and these are the targets to the upside. J&J, a healthcare name. I went ahead and left a healthcare name on here. I got a couple. The reason being healthcare had been showing relative strength on multiple time frames, but now it's just on that quarterly. So for this last quarter of 2025, it is in fourth place as far as strength goes. J&J and Merck both look really good in this sector. J&J is rounding out, creating a rounding bottom. This is my alert from last week, and J&J came within, uh, let's see, about 16 cents of setting this alert off. I don't just sit and stare at these charts, so I rely on my alert. It didn't quite trigger an alert there, and it got a very nice bounce, a bounce of about $4 or $5 there. So I'm just leaving the alert here, and we'll watch J&J. This zone has been tested, and I would even count this test here on last Tuesday as a test as well. But my upside targets are 209.72, 214 and a half, and then 217.07. Now let's look at Southwest Airlines again, part of the Jets ETF. This thing has shown relative strength on a quarterly and monthly look back. It just hasn't fallen enough to get me into a trade. I've had this on my watch list for a couple of weeks, and it's going to stay on my watch list, but I will remain patient for a pullback into this inside and up candlestick structure. Then I would be playing it back up to the 41, basically 41, 43.22, 44.55. So that would be my plan on Southwest Airlines if I get a pullback. Merck, this is the other healthcare name that I mentioned, is doing really well. I have a alert set for the lower weekly edge down here at 101.09. You have a inside and up, and also based on a trendy edge here at 99.03 to 96.79. I want to be alerted at that lower weekly edge that's lining up with the daily 21, but I'm not committed to taking a trade off there. Although if I see a uh, higher lows off this lower weekly edge on like a 30-minute chart, then I will go ahead and take the trade off there. Targets are 106.24, 109.08, and 111.58 on Merck. All right. All right, let's look at NVIDIA. We had a nice trade on NVIDIA. It was from a video that I actually pushed out on YouTube. It was a nice trade. But NVIDIA still has more room to run. The first buy zone on NVIDIA would be a pullback to 183.48 by 180.23. This is a buy the dip opportunity with a risk of about $3.25 and a reward much better than $3.25. It's an $8 reward. So a quick pullback to this zone is a buy the dip opportunity to get another trade on NVIDIA. Then I'm targeting 191.57, 198, and then 203 by 212. So I've got my alert set. I need a pullback. I'm not a momentum trader. If you are a momentum trader, then a push above 191.57, which is the upper weekly edge, that would be your trigger and your targets are above. For me, I'm waiting for a pullback. All right. Let's look at Pan America Silver. As you might guess, it's doing really well with the crazy strength of silver over the last several days. So, PAAS has a buy the dip opportunity for me at $50.25 by 48.52. All right, so I'm waiting for a pullback in PAAS. My risk on this trade's about $1.75. My reward is much better than that. And these are extension targets above. So buying the dip down near 50 and a half by 48 and a half, and then targeting 55, 57, and 60. PACS is a trade that I'm looking to get into on a pullback to 35.4 by 33.18. I'm targeting first 38.01, but really my target is 39.80. This is a 618 to 887 trade. And in the SPX room at Simpler, we had an awesome SPX trade off of this 618 to 887. Now we are close to that 887, so I would be looking for a pullback before going long and targeting 39.80, and then the all-time high 43.92. So I need a pullback in this name before going long. I would be buying the dip at 35.40 by 33.18, targeting 39.80 and 43.92. Let's take a look at PLTR. It actually gave a nice pullback yesterday. And you can see that daily candle came almost back to the buy zone for me. This is an inside and up candlestick structure. That's why it's a buy zone. The first target would be 95 by 97.72. That 97.72 is the upper weekly edge there. So it would have a resistance in this area, 95 to 200 basically. But it has a lot of I have a lot of reasons to like this zone. It is not a fresh zone. I want you to notice that this zone was created here, and this was the pullback that got that move out, and now it's coming back to test that. What I like is that the 21 has crossed back above the 50, and those two moving averages are inside of this zone now. I like that I have the monthly edge mid, the trendy edge inside of this zone. So This is about a $10 zone. PLTR moves a lot per day, so it might seem like a wide zone, but really, with a $7.50 a daily ATR, this thing could be, this is only a day and a half of average trading range inside of this zone. So you got about $10 risk on that zone, and the reward is $9, a little less. What I plan to do inside of this zone, I don't know that my entry will be right at 186.73. There is a very strong possibility that we pull back to 182.43. That would decrease my risk, and it would make my risk about $6 and my reward 13, which is much better. So I'm going to leave PLTR, and I'm going to create that alert just above the actual zone. And then again, I am waiting for higher lows inside this zone because it's not a fresh zone. So somewhere inside this zone, if PLTR continues down, Monday, Tuesday, I would be waiting for higher lows inside the zone. And if you don't know how I wait for confirmation inside of a buy zone, I have a video here on YouTube that will explain exactly what I'm looking for and when I take the trade after I get that confirmation. So be sure and check that out. All right, my targets above are again, my first target is going to be 95 to 200 and then 207 and a half. Ooh, sorry guys. DMC, you slept in today? Well, that's good. You can always catch the replay if you missed some. Qualcomm's another name that I'm liking this price action right here, and it's actually setting up right where we closed. So my buy zone on Qualcomm is 174.5 to 170.35. I've got some targets here 179.19. But notice I ran Fibonacci's from here to here. 182.40 to 187.96 are going to be my next two targets above this 179. Good morning, Claudia. Above this 179. And then above there, that's when we start looking for the 618 to 887 move. So I'm liking the rounding bottom here on Qualcomm. I like that the 21 crossed back over the 50. All my moving averages are stacked. This zone has been tested. Very, very, very obvious this time because price is just hanging out here at or around 175. But I have a risk of about $4 there. The reward is a little better than a 1-for-1, but these upper targets are definitely better for than a 1-for-1. So I'm really concentrated on the 50 and 618 to be my target zone for this trade. So I'm looking for 182 by 188 as my target zone on a trade from 174 to 170. All right. We already went over SPX. We'll talk about steel dynamics. This is, again, of course, another metals and mining. Yeah, Rom, it has been. It has been sideways for a long while, but I'm liking the price action there. And so I'm definitely interested in getting that Qualcomm trade. But I will watch price action. Rom, I know you're in the trendy room. So one thing you can do when you like a name like that on those higher time frames and it's right at or near a buy zone is watch it out of the PMZ. Okay. watch it out of the PMZ on Monday or Tuesday and use the PMZ as your entry. I do that when price is looking to open right at a buy zone. Okay. Awesome. Glad you love the trendy room. All right. Let's talk about steel dynamics. This thing here is my buy zone. 174 and a half, 172 and a half. That's about $2 of risk, and the reward is going to be about $3 and then $6. I like it to the upside for sure. This is the buy zone for next week. If for some reason we flush that zone, then my next buy zone is down here near 168. All right. In this zone here, because it's been tested and the move out wasn't grand and hasn't happened that long ago, see how the move out of this zone here, why I like this zone better, is because the size of the candles out of it. Notice the size of the candles out of this zone are not as big, right? That's why this zone here, I would be looking for confirmation, whereas this zone here with the imbalance out of it would be a starter position at the top of the zone, then wait for confirmation to add to full allocation. All right, but this is my initial zone on Steel Dynamics for next week, targeting 177.69 and 180.34. Everybody's favorite name to talk about would be Tesla. Tesla is just hanging out. It almost hit 500. That's what it seems like the world is waiting for Tesla to hit 500 here. Came very, very, very close. Now, I am a long-term equity holder of um, um, Tesla, so I'm exposed to the upside price action. So I don't have to be overly eager to trade this thing with options, but it likes to move. It is riskier because you never know. Elon could say something that just sends price to the moon or way down. The initial buy zone, though, is going to be here at 465.83 to 458.96. That's the initial buy zone. I really like this zone down here better, and that's going to be back at about 450. Now, I'm not sure that Tesla pulls back to 450 before getting an entry, so I'm going to go ahead and move my alert up here. I will use TSLL to trade this name, but if you trade it with Tesla itself, TSLA, then this is the initial buy zone, and here is a lower buy zone below. And of course, you're targeting 496, which is going to be the upper weekly edge. But if price makes it down here, this would be creating inside and down. So I personally would have a closer target to trim at here at about 485 to 496. All right. All right, let's look at Taiwan Semiconductors. This is a semiconductor stock that I like to trade. I am liking the pullback to this lower weekly edge area where I have some key moving averages and the daily cloud sitting here. So anywhere from about 295 to 292 would be that initial buy zone. And then I'm targeting upper weekly edge, upper monthly edge, and all-time high. Now, if price continues going down and I get stopped out on a trade with a very small risk here because of the width of the zone, then I'm looking for a trade down at 286.38 where we have an inside and up candlestick structure. Okay, so initial small risk zone is going to be 295.26 by, let's just say, 292. Okay, that's about $3 of risk, and reward is six and a half, $7. So nice risk to reward. It's just a very tight zone. So small risk, good reward. You I could be stopped out on this trade. I would have to see a daily candle close below here, but this zone is much wider, and the reward, of course, is upper weekly edge, upper monthly edge, and the all-time high. Okay? Let's look at one more financial name here real quick. This is Wells Fargo. Financials, I have Bank of America, Citigroup, and Wells Fargo on my list. Wells Fargo's buy zone for me is going to be 93.20 to 90.22. That's about $3 of risk. Now, the initial reward is less than or right at three, no, $2.50. All right. Then these are extension targets above. So what I plan to do is on a pullback here, do a starter position, so only half allocation, and then wait for confirmation towards the middle of this zone potentially to add to full allocation. That would help on my risk to reward perspective. And a stop would be a daily candle close below $90.22. All right, and again, let me show you those extension targets: 97.46, 100.7, and 105. All right, now last but not least would be one more gold related metals related name, and that's going to be Wheaton. All right, WPM. I am liking it for a pullback into this buy zone right here. I need to see pullbacks in these metals and mining stocks, in gold miners. I got to have a pullback before I'm going to go long these types of names, unless it was just a day trade in gold or silver or something. But given a pullback to 115.73 to 112.56, this is a buy the dip opportunity for me. I would be looking to go long, targeting 123.81, 127.48, 130, and 135. All right. So that's what I have on my watch list for next week. Again, a holiday week, the last trading week of the year. Things can be funky. The important thing is to be patient and to wait for the levels that you're looking for to get in a trade. Do not allow your emotions to wipe out a nice looking, profitable year. Don't let your emotions in these last few days of the year wipe out your profits, okay? We have an entire lifetime left to trade and all of 2026. Let's commit with each other to become more consistent and disciplined. Rom asks a question here. The dotted lines on your chart, are those just simple? Yes, Rom. The white is the 21 SMA, the pink is the 50 SMA, and the cyan color is the 200 SMA. All right. All right, guys, that is my time. Again, if you're not a member of the Trendy Trading Room or SPX Room at Simpler Trading, check out the description below and you'll find a link for the Trendy Room to join us on a trial. I think it's $7 for a month trial. Be sure and check that out. I look forward to seeing you in the trading rooms and trading live with you each day. I hope y'all have an awesome weekend, and I will see you in the next video.